Today, we gather at a critical junction, especially regarding the rising frequency, intensity, and unpredictability of climate-related disasters. And why are we here today? It's my pleasure to welcome you all to today's webinar titled Rising Climate Risk and the Future of Disaster Insurance. What are the challenges and solutions, to some of the problems we are facing currently in Australia and other parts of the world? This webinar is being hosted by CIB W120 Disaster and Built Environment Commission. So as we gather here today to discuss some of the solutions and challenges that we have across the climate-induced or climate-related disasters and how we can cope with it. And we already know that as climate risk escalates, so do the pressures that our disaster insurance system faces. In regions such as Australia that are already burdened by high vulnerability to natural hazard, premiums are soaring, policy exclusions are expanding, and for many, disaster insurance is becoming a luxury that a lot of people can no longer afford. The implications of this growing protection gap are profound, not only on the individual, in terms of individual, and also as a collective entity within our community. But also it does affect our broader social equity and long-term economic stability. Today's webinar brings together a distinguished group of experts. You can see some of them already in our Zoom. A group of experts from both academia and industry, and those at the forefront of research, policy, development, insurance practice, and also risk modeling. They will help us navigate the evolving landscape of disaster insurance in a changing climate, offer insight into the drivers of our current challenges, as well as the innovations that may pave the way towards a more inclusive and resilient insurance system. Our discussion today will explore the current issues surrounding flood insurance and potential solutions. We're also going to be looking at some of the challenges, structural, financial, and technical challenges confronting the insurance sector. And also there will be a bit of discussion around strategies to expand access, affordability, and particularly for high risk and marginalized populations. And most importantly, we will be talking about the collaborative approaches required to align government, industry, and community efforts in building adaptive and sustainable insurance frameworks. This webinar is more than an academic conversation. As you can see, a line of speakers also include people from the industry. It is a necessary dialogue about how we collectively protect lives, livelihood, and critical infrastructure in the face of escalating climate pressures. It is also a call to action to rethink how insurance, not just as a financial product, but as a vital mechanism for social resilience, climate adaptation, and as a shared responsibility. On behalf of the CIB W120 Commission, I extend my sincere thanks to all our speakers for sharing their time and expertise, and to each one of you joining us in this important conversation. I encourage you all to actively participate, ask questions, share insights, and help us shape the future in which disaster risk is not only better understood, but better managed. Let us now begin this timely and vital discussion. We will now move into the moderated panel discussion. So I will begin by posing a few questions to the panel, and then we'll also weave in that of our participants. So let's get started. Apologies, Paula has to leave us at the moment. She's got another engagement at 6. She's actually giving us notice about that. So let's start. My first question will go to Rade. You ready?
Yep.
Yeah. So from your experience, what is the most impressive reform needed in the disaster insurance? And what advice would you be giving to insurers struggling with risk-based pricing in flood-prone regions? Because we have that major problem right now in New South Wales.
Yeah, let me take those in turn. I think the most pressing reform is we must urgently reform building code and land use policies to make them forward-looking and to begin to future-proof them against changes in the climate we know are coming. It's almost insane that we are not doing more to stop development on beachfronts in this country and others around the world. I used to live in Florida. They are still building things on the beach in Florida when it's going to be underwater in 20 or 30 years. We just, I think there's a comment about, what's the first thing an alcoholic ought to do is stop drinking or something to that effect. And I think, the first thing we need to do here is stop making the problem worse. So, the building code, it's really a struggle there, but I think the Australian code has taken the first step towards that by introducing some reforms, but they're not going to even take effect till 2028. So I think that's first thing. In terms of insurers who are, struggling with risk-based pricing, I would argue that insurers can't fix this problem because in a competitive market, they have to charge what it costs. And if they attempt to subsidize risks on their own, as Max and Paula were suggesting, well, their competitive forces will simply make their books of business unprofitable. So, in effect, I think the best thing insurers can do, and the insurers don't like this when I say this, is they almost have to advocate for some sort of government solution like Flood Re or some other government mechanism that effectively comes in, provides those subsidies. Most insurers don't like government intervention in markets, but in the case of these boundary perils I'm referring to, beachfronts, riverside property, and to some extent bush-urban interface, I think there's no solution other than the government coming in and providing some subsidies or putting some rules in the system, as Max pointed out, that'll help address this problem because the private market can't solve it.
Thank you so much. That's very interesting. So you do emphasize on the importance of the building code and also improving our planning. I've seen a lot of planning reforms or planning work that is being done here in New South Wales, and you'll be wondering why do we continue to build on floodplains when we know that the people there, the community there, are going to be vulnerable in a short while.
Because we have a housing shortage, and there's a big bit of, you've got ministers and other government planners that have to deliver housing in the next 3 to 5 years when the floods may not come for 20 years. So I think it's a very difficult problem the government's in with the housing shortage.
Yeah, thank you so much for that. Even at that, we know it's a difficult problem, but we shouldn't be creating more problems in the future for our community. Anyway, that is another discussion, for another time. Okay, I've got a question for you, George. What is your opinion about the underlying causes of the present issues surrounding flood insurance and their solutions? If we want to give an example to localize it specifically, not just general, but let's say New South Wales or Queensland. Underlying causes of the present insurance issues and flood insurance, and what are their solutions? Specific practical solutions that we could implement.
You mean, what do I see as solutions to the flood insurance problem?
Yes.
Yes, localizing it.
Okay, well, I did briefly say that, unfortunately, because of the existing infrastructure of how buildings, where they are, and all the rest, we're going to have that problem with us for a long time. And what I was saying is that cost needs to be the flood losses. They can't all be taken by the insurance industry. Well, that nearly everybody has said that. And my solution, well, one of the solutions, there are many, is that the government and the owner have to take the first and most frequent losses. If the insurance industry can be left with the risks, which will be larger risks of more extreme floods, that reduces their annual mean loss as a ratio of the sum insured down to about 0.2% or 1 in 500. They can take all that. That's the big losses. But the lower part will have to be taken by the owner and the government by some scheme. I mean, I like what Daniel said about the focus needs to be on those who can't do anything else, who are stuck with the situation. And and of course, in terms of what people can afford. There are alternatives to, I'm not so keen actually on indemnity insurance for high flood risk areas. I believe parametric insurance offers a much more realistic approach, because what parametric insurance is that you insure for the flood level exceeding a certain level relative to your house position. For instance, if you're a multi-story building and your bottom floor, you can afford to let it go. You insure for a certain amount of money that you can afford, that the insurance company pays purely on the risk of the flood, say, reaching the first floor level. And you just buy as much as you can afford. That actually would help the insurance industry a lot more to make things insurable. But if there's a gap, that's when you have to bring the government in then as to how it would fix that gap between those two things for people who genuinely can't afford to get up to the gap between what's can be tolerated by the insurance industry. Because in the long term, you know, it's a matter of just building to much more rigid construction standards. It's not a matter of not building in floodplains. All the ideas that I've been presenting have all arisen from my involvement in an Asian Development Bank study of the feasibility of flood insurance in rural China, rural Hunan, and it was based on a study of a town of 200,000, nearly all of which was in the floodplain. But nearly every building was 5 stories or more high. And so it was easy to come up with a parametric solution that would be acceptable. And the thing about parametric insurance, it's not nearly as susceptible to moral to cheating the system, which, you know, or major problem being under insurance. The owner decides what he wants, and it's simpler to calculate. All these things actually reduce the markup. So, yeah, that's where I'd be looking at.
Thank you so much. Thank you so much, Judge. I know that all our speakers here have spoken about both government, both private and public enterprise coming together to see how we can help the insurance industry. And I used to live in New Zealand. That's why I met George when I was in my PhD. It was a long time ago. He was one of my interviewees for my PhD then. In New Zealand, we do have the Earthquake Commission, EQC, that actually provide a form of subsidized insurance for earthquake. Shouldn't we be thinking of introducing something similar in Australia? This is for all the speakers. If you have any answer, please jump in, because we already have a system that works, a little bit but at least it is working. It's been tested through, it was tested in, I think about 3 earthquakes now in New Zealand. So is this something that Australia should be thinking of learning from or working something similar? Please feel free to jump in if you have something to contribute to that or say to that.
It's very quickly, I'll let the others speak. I don't think pools are like the solution to all the problems. They simply provide a funding mechanism, but they don't make the risk go away by themselves. And ultimately, as the Insurance Council here points out very well, you have to reduce the risk in the long run to make the premiums affordable. And that means better defenses, better resilience, better building codes, all those sorts of things. So a pool just simply shifts the money around. It doesn't fundamentally solve the problem in the long run.
Yeah, thank you so much. Dan, anything?
Yeah, I'd like to take credit for a lot of the things that I said in my spiel, but actually quite a lot of it comes from EQC. So I work quite extensively with some of the EQC counterparts, particularly who went through the Canterbury earthquakes, and talking about their experience, what they learned. I think one of the things that's really important when you're talking about pools is that, at least relating it to what I was talking about, is it's almost like you're not necessarily creating a new player in the risk system. You're just creating a different way of structuring that system, if you will. So again, it's not going to reduce the risk. It just spreads it to different forms of what it currently is. But one thing that's very clear on the EQC side is that their strategy, if you look at it, is not just around insurance pooling, right? It is more holistic, and as it's now the Natural Hazards Commission, it's more comprehensive in terms of looking to reduce the risk over time as well.
Thank you so much. So I would like to throw a question to Max. My first question is, what are the implications of climate tipping point on long-term insurance strategies from your experience from Austria?
Yeah, so it's not just my experience from Austria, but more generally. So I think climate tipping points are they're very difficult to project, right? They're very uncertain, and therefore it is quite difficult to involve this in insurance strategies for insurers to take these into account. But there are quite a lot of quite some examples of such tipping points occurring, and particularly how insurers actually did adapt. So I think most recently, or a quite severe example, was in California, right, where the wildfire coverage was significantly reduced, and that happened actually just before these very large wildfires occurring there around Los Angeles earlier this year. So that was sort of you could see there's a tipping point, right, where insurers decide, well, this is no longer insurable, and therefore we retreat from this market. And you can see also that this has very significant societal consequences then. There are also other examples. So, for example, in my country, the Netherlands, where flooding was usually it was insurable up till 1953, where there was a huge coastal flood, and then all insurers decided collectively that these breaching of coastal defenses is no longer insurable. But also in, for example, in the UK, where after the 2000 floods, flood insurance was no longer universally available. Or in Germany in 2002, where after large floods, premiums rose by more than 50% across the whole all policyholders. So there are quite a lot of examples of these kind of climate-driven tipping points, but also tipping points don't have to be climate-driven. So these could also be driven by socioeconomic development, right? So we've been talking about, for example, beachfront development and these kinds of things. Development in floodplains could make risk pooling less sustainable, and then in the end, insurers deciding, well, this is we retreat, we reduce coverage, or we significantly increase our premiums. So although we cannot plan, or insurers, it's quite difficult to project these into long-term strategies, but we can design insurance systems that are more robust to these kinds of events, right? So what I was talking about before, so for example, mandatory insurance with a certain degree of risk sharing that might have to be enforced by a government through, for example, subsidies. These may be needed to ensure that insurers are able to pool risks even when such climate or socioeconomic events or developments occur.
Thank you so much, Max. That was a very thoughtful response. Thank you so much. I've got a question for Rade from the participants. So he says, would you be able to elaborate on how technology can be used to help or improve insurance affordability?
Yeah, that's a great question, and I'm glad I have a moment to answer that, so I can share the response with everyone. There are a number of excellent initiatives that are underway to empower people to learn more about risk and take control of it. In Australia, there's something called the Resilient Building Council. They developed an app which a consumer can use to go into their home. This happens to be bushfire, not flood at the moment, but I think they're expanding it to other perils, and effectively use an app on their iPhone to help answer a lot of questions and then identify actions that that person can take to reduce the risk of bushfire. In some cases, this stuff is quite simple, like cleaning your gutters out or putting gutter guards in to prevent, buildup of vegetation in your gutters. There's less probably that can be done in terms of flood at the individual level. But certainly, just in terms of learning, as I think Max pointed out, or maybe it was Paula, that, collecting all of the data that's coming in and then analyzing it as to how to make better and smarter decisions. I mean, just in flood, for example, raising the height of the electric outlets in flood-prone areas up on the, on the wall farther. So when the water comes in, it causes much damage to the electrical systems. So there's a lot of things I think we can do to reduce loss, both at a macro level by things like building dams and levees and seawalls and large defenses, but also at a micro level, at the home level, by empowering people using technology like smartphones to help them understand how to protect their houses, make them safer for their families, and take actions to promote resilience.
Oh, thank you so much for that answer. Just an open question to all our participants. One of my PhD students just sent me a note now asking me, what are your thoughts about using blockchain technology? Is there a correlation between using blockchain technology that provides access to data and housing and insurance affordability? Anyone? Have you guys started thinking of using blockchain technology and AI, all these new AIs that we're hearing?
Well, AI, yeah. Oh, sorry, Dan, you go ahead. I was going to answer. You go ahead, please.
Just to clarify, in terms of the administration of insurance, or to understand the risk component of insurance, is that specific application that was trying to apply blockchain to?
I think the first thing she said is administration. Is the operation? Operation is operationability and administration, in terms of blockchain. Then possibly AI in terms of, infusing all the data across different terrains in terms of hazard modeling and all that.
Dan, I can take a crack at the AI one. If you want to go first, please do.
Yeah, never.
Now, I was saying quickly, the blockchain is probably more useful in terms of, sourcing things and making sure, the origin and can trace things like supply chains and stuff. I don't immediately see where that would be helpful for resilience, but certainly AI. Like I saw a presentation at Comp from the Japanese where they actually were training AI to look at pictures of disasters generated by drones as they flew over areas, and then be able to direct the repair facilities or the people going in to try to help, using AI to direct where to send people to where the damage is, or even to do damage estimates on the buildings and order supplies and things. So I think there's a huge application for AI in terms of disaster recovery, and also in terms of helping people, make their homes more resilient. Sorry, Dan, you get other comments there?
Yeah, I think the application around blockchain, a little bit more around verification of certain things. I have seen that. I don't think it's in the Australian context, but areas where you may have loss adjusters and claims being paid, and then trying to string together the whole process, particularly in that claims management piece. But again, the application in Australia, I would have to think about it a little bit more. But maybe, to share your point as well, vast opportunities in the AI space, particularly around image recognition technology, things around speeding up the process, in particular of how insurance functions. But then also, your aspects around trying to be efficient in terms of also understanding your risk. If you can take a picture of your house, for instance, or take various different aspects, you can then interpret the information to give you an idea as to what your current situation may be, and just to link it to something Rade was talking about before, particular measures you could take to reduce your risk, which would then have a tangible, meaningful impact on reducing the premium and overall system. So that's one element, but there's various different AI applications that could be introduced into the process and try and help overall.
Thank you so much, Dan. George,
Can I say something on that?
Go ahead.
On this AI thing, I think we need to keep in focus is that insurance is just part of community resilience, ensuring community resilience. It's one contribution. At the moment, we have these disaster catastrophe risk models, which have been really powerful as far as insurance is concerned. In my view, these models now need to be extended so that you're modeling community resilience, all the things that contribute to resilience. And this is where I see AI having a huge role, because it's another order of complexity, or maybe 2 orders of complexity more than just catastrophe loss models. But such models, once you had those sort of models developed, you can then look what things contribute most to community resilience, not just insurance, but all the other things like rapid reconstruction or rapid repair in the construction business. You know, you can look at see what is important and what's not, but you need sort of models to do that, just like we use them now just for insurance.
Thank you so much, George. I think this leads to another question. One of our participants has posted questions around communication gap, but I think what that question is looking at is data sharing. The participant said that is that are there communication gap? If yes, what can we do about it? I feel that we already have a lot of solutions to building back better, ensuring homes and properties are climate resilient. We have all those technologies, or we have all those, designs and out there. But is that information getting to the people who need it? So I think this is about collaborative data sharing. How do we ensure that data is properly shared? The correct data, especially about vulnerability, is shared to insurance and also to the homeowners, to councils and prospective community members. What is this? How do we bridge this collaboration?
Well, I'd suggest one thing to think about is not only how you do it, but when you do it. So if you think about intervening, for example, at the time somebody sells a property or they're trying to sell their house, that may be a time when they're going to realize a large gain in value, or they've, actually are willing to spend $20,000 or $30,000 to fix the house, to make it more sale worthy. So perhaps also intervening at the right times to get this information to people, maybe through real estate agents or other stakeholders, may be an effective way to motivate people to actually spend, a significant amount of money on the house. Whereas if they were just doing it looking for a discount on their insurance premium, it might take them 10 or 20 years to get that money back. Whereas if, they're selling their home, they might be able to get it back right away. I think that you got to start thinking more creatively about how to motivate people to make investments in their homes or businesses or whatever else.
Thank you. Dan, Max, George, any addition to that?
Yeah, the only quick thing I'd say is that information, in my opinion, is a little bit siloed. It can be a little bit centered on resilience. It could be centered on insurance. It could be centered, but I get this question a lot. Like, if I have $1, am I better off spending it on an insurance premium or spending that dollar on my resilience? And each situation is slightly different. And admittedly, that can be a bit confusing to people. So I think there's more work to be done for it to be a bit more cohesive and a bit more understandable for people. And that's part of the journey of understanding risk in my opinion.
Yeah. Okay. So can I ask a quick question? So if I decided to spend $1 or $100 to make my building better, to become resilient, how do that get captured in my insurance premium?
Well, that's right. You should be rewarded for it, right? Because you've invested in resilience. In that hypothetical scenario, is that happening in reality? can't say for certain, but it depends on what resilience measures that you put in place, right, and whether it's recognised in your insurance contract in that regard. But realistically, if you are investing in reducing the risk, you should be rewarded in response to that, and that's where your payoff period almost is for making that investment.
So possibly the next discussion should be if owners are going to be motivated to invest in, strengthening their properties, making sure that they are more resilient to flood or bushfires, then there should be a way that the insurance industry should capture some of these good things that they have done, which at the moment, I'm not sure whether this has been done. Otherwise, why do I want to spend hundreds of thousands or 50,000 or 20,000 to, improve my building? At the end of the day, it doesn't reduce my premium. Should this be something that the government should be looking at, or researchers or insurance industry should be looking at?
Well, the insurance industry is looking at that. I mean, that's already being done. Insurers are offering discounts, and they're capturing more information. So it's happening already. Probably needs to happen more, but that's why I brought up the issue of maybe targeting time of sale or other things, because sometimes an insurance premium discount is not going to be enough to motivate somebody to spend $20,000. Well, whereas a resale value might be, or some other incentive from the government or some other way to, encourage people to do it. You can't put this all on insurance discounts and assume that's going to solve the problem.
Thank you. I think, do we have any more questions? We've got two more questions here from the audience. So I know that we're far spent with our time. I'll just quickly read this. Based on your professional experience or area of expertise, I think this is a Rade? No, okay, to everybody. To what extent do you believe property owners are adequately informed or aware of the availability and specific provisions of insurance or flood insurance within their respective localities? That is, provided are building owners informed about issues around insurance or the vulnerability, and also flood insurance in their area? I think it's about being aware of your vulnerability.
I'll quickly start saying it's a journey, and there's a long way to go on that journey. Dan?
Yeah, look, I'm surprised sometimes where you can show someone a map of their property and show them that there is a flood overlay directly there, and that it is in recent memory, almost in their lifetime, and people still shrug their shoulders and say, well, it happened so recently, it won't happen again anytime soon. And these are smart people, right? And there's just look, people aren't in the day-to-day industry of looking at this all time and time again. So you have to appreciate where they're coming from and try to think more generally about how people perceive risk overall. Again, that's the risk appetite part. People will take that. Some people will look at that immediately and say, I do not want to consider that. And that's challenging because there's a human component to it.
Okay, I think that also leads to what the next question was talking about too as well. Someone just posted this very interesting question. I think it's meant to one of my colleagues. I'll just quickly read that out before we call it a day. Okay, she said, oh God, questions are coming in. I have two questions. One, Japan does not rely on market-driven or insurance approaches to post-disaster recovery. What can we learn from them? Second question, California is heading towards community-scale approaches. For example, only when a community greater than 100 gets their fire resistance plan as a collective insurance, as a collective, insurance companies will then provide insurance to homeowners. How do we move away from individual responsibility to settlement scale? So there are two questions there. So the first is that Japan does not rely on market-driven like we do here. Approaches
Can I answer that?
Yeah, go ahead.
All right.
I mean, what they're talking about is people agreeing to have certain fire resilience plan. Well, in Australia, we have really very high standards regarding fire, as far as individual buildings are concerned, with all these sprinklers and smoke detectors, etc. which the insurance industry, of course, has played a big role in ensuring those regulations. As far as I know, there is no problem in Australia as far as insurance against building fires is concerned. This is what I talk when I talked about needing priority. This is sort of going, I would think this would be a very low priority, certainly not required in Australia because we already have community scale fire resilience plans. It's incorporated in our regulations. Maybe in California, they don't have these sort of regulations. The other question about Japan too, it says there, it doesn't rely on insurance. Now, things must have changed because when I was in the reinsurance industry, the single biggest reinsurance cover was for the Japanese earthquake insurance system. So I'd be very surprised if they've abandoned that, because I have a friend in New Zealand who does a lot of the work for Aon on modelling Japanese risk for the insurance industry. So, and he's still doing it. So I don't understand. I think that's not a correct statement. They do rely on insurance, certainly for earthquakes.
Can I drop in a question or a comment
Thank
on that
you
one?
so much, George. We're almost rounding up. I don't know whether okay, quickly drop your question if they can just wait.
It was just on that. It was on that last one that George was commenting on. Hi, everybody.
Hi.
I just had the pleasure of seeing a presentation recently in the US in regards to rating by insurance companies of individual homeowner organizations or homeowner societies, I think they call them. So there would be a suburb or a small area, like 2 blocks, and all the people in the area have a little meeting. Rade might know more about what you call it, but then that little community as a group come together, and as a result, the insurance company gives everybody in that group a certain discount. And they were trying to formalize it at this conference, and they were talking about how they were doing that. It's certainly not something they would have in Australia at this point because we don't really have those little kind of homeowner groups. But it's a big thing in those kind of housing developments in the US, and maybe something that may change in this part of the world.
Thank you so much, Will. Thank you very much. We're so much out of time. I'll send some of these questions to our speakers. We still have a lot of questions here. I'll send them to them. Please subscribe to our LinkedIn page, CIB W120. This is where I'm going to post all the answers. I'm going to go post it on my LinkedIn and tag every of our speakers and everyone who have attended today. So this has been very, 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 very insightful. I would like to say a big thank you to all our participants and all our panelists. Thank you for your time, expertise, and generous discussion and insight. And thank you to all our participants as well. This has been a very rich and necessary discussion, and we hope it sparks continued collaboration and innovation as we address the challenges ahead of us in Australia as well as globally, because I know this is a problem for all of us. So thank you, everyone. And on behalf of the CIB W120 Commission, I appreciate your time and your contribution. I know dinner is ready. Everybody wants to go and eat dinner now. And we look forward to continuing this dialogue in a future event and collaborative effort. And thank you once again. We wish you all a productive and resilient day and week ahead. Thank you, everyone. And have a good evening, have a good morning or afternoon, wherever you are. Keep in touch, please. Thank you.